Welcome everybody and good morning. This is the Saturday morning Viper Trading webinar. If you are here to learn about trading futures markets using the Viper tools, you are absolutamente in the correct place. Without further ado, let's get through our disclaimer and then over to some charts where we can learn about trading some futures markets and making some money. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everyone in here does know that you do trade at your own sole discretion. Alrighty then, let's get over to some charts. This morning, I'm going to start with gold. Then I'm going to start to work in some equities, and we will conclude with crude oil trading. Let's get over to screen one. Stand by. All right, so if you are completely new, I'm going to lay down a little bit of a foundation for you so you can start to sort of understand what you're looking at. Sometimes we get some feedback that our charts are a little confusing, and that's okay. It's like anything when you see or learn it for the first time. There might be a little confusion involved, and that's okay. We'll work through it right now. Let's do it. We trade futures markets intraday. Namely, in the live trading room, we have the ES market, which is the E-mini S&P futures. We have gold, GC futures. Now, keep in mind, and I'm going to show the correlation of this very shortly here. ES is considered what's called an equity market. Equity would be sort of the futures version of the cash or spot markets that you see traded on like Bloomberg, which would be the Dow itself, or the S&P 500. So ES is the futures version of that. So the value that you see on the chart will be very close to what the cash value, but slightly above or below it, right? Depending on what the market's doing. Same with gold. That's the spot price. This is the futures version of the spot price of gold, okay? This is the NASDAQ futures, NQ. Some of you trade it. I know you do. This is the tech companies. This is the E-mini futures version of that. The Russell is in the room. That's the futures version of the Russell 2000. $5 per tick of movement, and all the equities are on the December expiration contract. And finally, we have crude oil, which is CL. That's the crude oil futures. That's $10 a tick. And sometimes it has a correlation to the equities, and sometimes it doesn't. Several years ago, it was very tightly correlated to the equities, but it hasn't been in the recent past. And so next week, for instance, on Thursday night, I'm going to go through this in a different way to help you select what instrument you probably should trade, because they all have their own personalities. They're like people, kind of. Some are feisty. You know people like that, right? Some are a little bit, kind of crazy a little bit. And futures instruments are like that too, in the way that their volatility plays out. So we're connected to a data feed to our broker, which is Ninja Trader, and that's the platform we trade on. This is Ninja Trader NT7. And the indicators we have are the background colors. You can see there's a red, there's a green, and then there's sort of this intermediate color, which represents indecision. We have bar colors. Blue, yellow, and red. We have, you can't see the power meters because the data is just loading up. We're here on a Saturday. That'll fill in a few minutes. Object trader alerts. When you're in an uptrend, you turn the longs on. When you're on a downtrend, you turn the short alerts on. Predictors are the swings. When a market is going sideways, they tend to be all clustered tightly in a flat manner like this. When a market is trending, say down, they will move down with the market. Predictors, swing levels. And of course, the most prominent thing on here is the bands. This gives good form and structure to our trading. We have the mid band is the thick line in the middle. A total of 8 bands. 1, 2, 3, 4 bands below. 5, 6, 7, 8. 4 above. Line 2 is the thin red line here, and line 6 is the thin green line. Now, I've added two other indicators to what you would normally see in the room. What normally you would see would be without the current open high-low, which is the dashed white line, the dashed blue line, and the dashed black line is the open. The blue is the high. And then I've also added the volume. I occasionally look at this, not a whole lot intraday. I may look at it, for instance, in the morning at the open. I might see big pushes of buy programs going through that'll push the market up. That'll just sort of confirm my thinking of a long or a short if you see a lot of sell contracts coming through. Occasionally you'll see these spikes come through like this. You know, this is in a downtrend, that would be buy to cover, right? Selling exhaustion. That's another thing. Selling exhaustion when you see these huge spikes. Selling exhaustion means that you're flushing out all of the sellers. You get a big spike in sell contracts, and the market tends to go up after that, right? Buy to cover in a downtrend is where they're buying to cover, where they all shorted up here, you know, all the short markets. So let's talk about a downtrend first. Quick audio check. Claude is saying he's having audio problems. Anybody else having audio problems? Audio check, visual check, cursor spinning in a circle. Everybody seeing everything okay? Can you hear me? Claude, hey, by the way, Claude, if you have audio crackly issues, all you got to do is just log out and then come right back in. And that should fix it. Okay, anybody AV problems, just log out and come right back in. Okay, cool. All right, good deal. By the way, does anybody trade gold? Any GC traders in here? Anybody trade ES or gold? ES would be the mirror image. Show of hands. ES traders, gold traders. You like either of those two instruments? Show of hands. Oh yeah, gold and ES. Cool. A lot of you. Wow. Hey, by the way, if you're still coming in, some late birds coming in, this is recorded. And after it renders, give me about an hour, hour and a half, and I'll send the link to you for the recording. And if you have to leave early, don't worry about it. We got you covered. We'll get you the recording here today, okay? All right, good. Okay, so let's talk about how markets can move. And this is all financial markets, no matter what they are. Stocks, bonds, Forex, Bitcoin, currencies. They all have very similar movements in the fact that they do one of two or three things. You can have what's called a downtrend, okay? Well, let's start with this. Markets tend to vacillate between periods where they can go sideways, as you can see they did right here, and then they can go into a downtrend or an uptrend. Here's an example of a downtrend. So a downtrend would be lower highs and lower lows, as you see with the stair stepping down. And then here's an example of another consolidation or sideways patch, kind of right in here. And then you get, this is a good example of trend continuation right here. So in here, this wouldn't necessarily be a trend change. This is kind of a consolidation patch and then resumption of selling right over here. The other things that are characteristic of a downtrend are predominantly red bars, swing lows of the day being taken out, which is the white line here, which would mean a continuation of fresh lows over here like this. I'm in California. This is Pacific time right here, and this example I'm showing is on the morning of the 5th from this week on gold. So most of you know, of course, overnight they have I'm running out of data. Okay, that's fine. Here's what you call the Asian session, which starts at 5 o'clock my time, ends around midnight. And then you have what's called the European session. Big banks in London and Europe trading futures markets, gold, ES, all the currencies. So overnight, for instance, here, transitioning from the Asian session to the European session, you had at the tail end was a sell-off, so you were already in a downtrend, right? You come up to midnight, we consolidate, and then in the European session, the downtrend on gold continued. Everybody see that? Now, let me put it to you this way. And I'm just going to put this once, and it's pretty straightforward. Most of you will know this already. So if you are in a downtrend, you are taking sell short trades only, and you will do this on retracements. If you are in an uptrend, what kind of trades do we take in an uptrend? What would be the opposite of the downtrend? What should I put in here of the type of trades that we're going to take in an uptrend? What are we selling short there too, or is it different than a downtrend? Right. You're buying. You're getting long. That's right. Good. Yeah, so in an uptrend, let's just put it this way, you are buying or getting long / long from retracements. Right? Now, how about a consolidation or sideways? What do you do on that? Sideways equals what? What should I put in here for a choppy sideways consolidation type market? Range trading. Good. Sit on your hands. Okay. Fade the breakouts. Okay. Well, now let's think about it for a second, just sort of intuitively. Just think about it. Just bear with me for 1 second here if we're thinking about how we're going to approach ranges. Now, are all ranges created equal? Well, I don't know. How about a range? Let's think about it just for a second. How about a range that was? Let me put it this way. Let me come below sideways and say, what if we had a range that was, how do we put it, sideways to down? How might we approach that? In other words, you had consolidation that occurred coming off of a downtrending market. How might we approach that? Would we be shorting the top? Would we be buying support, or would we trade both? If you were in a downtrend and then went into a consolidation area, would you be shorting resistance? How might you approach that? Sell the tops. Good. So in a sideways to down market, in other words, you're consolidating coming off of a downtrending move, yes? We would short the top. Yes? What do you think? If we had a range that was the opposite of that, where we were coming off of an uptrend, so we would say sideways to down, or sideways to up, we would buy the support at the bottom of the range, right? Okay. Now, I think that pretty much covers every type of market, right? I mean, at a very high level, when you think about markets and what they can do and how we're going to trade them, I think that would cover probably pretty close to 100%. I mean, you're really going to be going either up or down, or sideways to up or sideways to down, yes? Would you agree? Cool. All right. So before we move on, and I need to be clear about something here in the trade entry type, so we can say how we're going to trade it, but then we have to think about where are we actually going to get in to take a trade. So let's cover that topic next. Here's an example right here. What I'm going to do is I'm going to show the trade entry types, and then I'm going to back up a little bit, and I'm going to start to do sort of little mini quizzes where I'm going to show some trade entry types, and then you're going to try to figure out what that's going to be. And then in the end, what I'm going to do with a few different instruments is I'm going to replay real time and see if you can pick out what you should have done if you were sitting in front of the chart at that time. So let's cover the down first, since we got gold in a downtrend here. So a mid-band trade, you hear that in the live room all the time. I'm going to take a mid-band short on a kiss and roll. Now, what does that mean? Was that you going to start like making out with your wife or girlfriend? Is that what you're going to kiss and roll over or something? What are we talking about? Kiss and roll. What the heck does that mean? Well, let's think about it. So here we got a case where the thrust is down. The market gold is heavily selling off. You can see these huge spike in sell programs right here. See all the thick red down here? And how the lows of the day at the time were being broken. Just bar after bar thrusting down. You have a red midband. Looks like stairs going down to your basement. And you have a red stealth line, which is this sort of thin, sneaky snake looking line right here. Okay? Now, when you retrace in a downtrend, what direction does the retracement go? Is the retracement in the direction of the thrust, or is it counter to the thrust? When you have what's called a pullback or retracement. Retracements go with the trend, or retracements go in the opposite direction of the trend when we say the word retracement or pullback. Counter, right. They are a pullback. They by nature, so if you're in an uptrend, the retracement would be down, right? If you're in a downtrend, the retracement is up. And it's normally a case, in the case of the downtrend, of short covering. So you can see right here, for instance, in the volume, that you got a little spike of blue. Now, just to be clear about this, this is not a buy program. A buy program would take the market higher and start to head up in the opposite direction, and you would have a change in trend direction. That's what's called a buy program, and it's a trend reversal. In this case here, all the shorties who had been short from way up here, wherever market participants and the algos got in, they're taking profits on the short. And in order to do that, you have to buy to cover, evidenced by the blue bars here on the up. So those are buy contracts to cover, buy to cover. Okay? All right. Now let's do a detailed analysis of a trade entry at the midband. There are several ways to get in. One way that's very helpful, I found, is you can draw a sort of a retracement line like that. So that would be a counter trend up retracement line, yes? We come in and we sit right on the midband. So a midband trade is defined as bars that go into the, on the midband itself, which these bars are right here, that one specifically, or the band directly below the midband, or the band directly above the midband. With these rectangles right here are what defines a midband trade. Now, where this gets a little bit confusing, and I can understand that when we were building this system and we were contemplating how to trade it many years ago, we thought to ourselves, well, how do we know it's time to get in? How do you know when the retracement is done? Because that's kind of the secret sauce, right? I mean, if you think about it, right, all retracements are not created equal. If we could just sit here and say, well, you know what, this is the perfect retracement here, and you simply engulf these candles with a rectangle box using your object trader tool, and you're filled short on the close of this bar right here, and every single time a market did a retracement and a downtrend, it did exactly the same thing every single time, life would be good. And we'd all go move to an island offshore and just swim in the sea notes, right? But the rub is all retracements are not created equal. So a good place to start is this. Look for, when you're just learning and you're starting to trade these markets, intraday trading of futures markets, I think a good solid place to start is at mid-band trades. Because in all due respect, with all the different trade types and entry techniques you can take, this is one of the sound and most reliable from a percentage return point of view, in terms of how well it could play out. If you get really good at mid-band trading, you can do quite well in the markets and make very good money. And that's a good, solid, foundational trade entry type right there, mid-band trades. So the different ways to get in are using the Object Trader tool, which is a panel. You've seen it. Gary has shown it many times in the room. It looks a little bit like Chart Trader, but it has much more functionality to it. And it's semi-automated in the fact that once you activate the box, when the bar closes outside of it, you're filled short with the market order on that bar right there. Now, are there other ways to get in? Could you put a limit sell order here? And you could engulf this with just the box itself and not activate it, and actually put limit sell orders in here like this. Yes, of course you can. And you'd be filled. Now, the difference is that you would have to put in your targets. You'd have to put in your stops. Your manual stop would be up here, 12 ticks above your entry. I would guess it would be somewhere right in here on your initial stops. We'd like to take a scalp target, so if you can do 2 lots. So let me just explain. All trades would be similar to this. Now, you can do whatever technique you like. I'm just going to share with you an approach that works pretty well. So you would trade 2 lots, long or short. 2 lots is 2 contracts, right? So 2 contracts. Oops. 2 contracts. If you can, that's optimal. And the way that works is you take one. The first contract is what we call a scalper. This means that your target is somewhere maybe 10 or 12 ticks out. Right? The second one is your runner. Is your runner. And you use a trail stop on that. Okay? All right. So I'm just going to explain this once because I'm going to assume that everybody's going to remember when I show futures trades on different instruments that you're just going to assume that that's how you would approach it. Whether you're long or short, the entry technique approach is the same. Whether you're long or short, doesn't matter. So when we say scalper, what does scalper mean? We getting some kind of strange funky knife and chop it into something? I don't have Object Trader loaded here, Nathan. I have all my charts were prepped without Object Trader, but there are videos that show how to do that on the website and in the subscriber area. And if you can't find one that answers your question, when you come in the live room on Monday, if you could just ping Gary and he could pop up the Object Trader, which he does almost every day, and show it and how it works. Okay, is that cool? All right. So what do we mean scalp? One is a scalper. What the scalping? What are we chopping a coconut or something here? This is trading, man. Come on. What are you talking about? A scalp is a short when the market moves in your favor very quickly and it obtains a close range target. So let's do an example here. Let's take a look at the short on the Goldie here. Let's suppose you were filled at 1501.90 short on the close of that bar. Now, if we were going for 10 ticks, where would 10 ticks be? Well, it'd be 10 ticks underneath here, right? So we would subtract it because we're selling short. So that would be 15,008. Where would 15,008 be? It would be right here. Right? 15,008 is right here. Now, Object Trader does this for you, but you could manually do it. Another spot you could go for is 12 ticks, or you could go for the low of the day, fading it by a tick or two, which would be right here. That'd be closer to like 16 ticks, 15 or 16 ticks on gold. So that would be from here to here. Now, this is your initial stop up here. I'll just put that so you remember what it was. So initial stops are up here. Initial stops. It's generally 10 to 12 ticks behind your entry. So let's see where that should be. If you got filled at 0180 plus 12 ticks is 1503. So that would actually be sitting somewhere right about in here, like that, which is good because that's tight to where the swing above the entry is. That's your initial stop. and your scalp target is here. Which is target number 1. I have a problem with my letters today here, scalp target. Now, if you're manually trading it, you would have to go in very quickly and place all these targets and stops. Object Trader does that for you. Once you engage this box and you turn the short side on and it's closed, targets will be placed, stops will be placed, and you can engage the trail and it will manage the trade for you. Well, Louis, the scalp target is also a function of the type of market you're trading. For instance, on ES, your scalp would be much lower. It's generally half. Scalp targets can come off on ES at 4 ticks because you get like half of the movement that you do on gold. If gold ran, 20, 30, 40 ticks, ES might only move 10 or 15. Yeah, so it's a little bit of the function of the volatility of the instrument you're using. Gold, a good target's 10 or 12 ticks because if it's going to move in your favor, you're going to get that pretty darn quickly. Okay? All right, so that's your scalp. Now, what you need to do is, if you're trading manually, is then take your initial stop. Once you hit your scalp target, you have 1 contract remaining. You take 1 off here, and you move your initial stop down to within 2 or 3 ticks of your entry. So now your stop would be here. Why do we do that? Anybody? Why don't you just leave them up here? You got 1 contract left, open, running. You're your runner. Just leave the stop up here. Why you got to move it? What the heck's that all about? Why are you going to take that down behind 2, 3 ticks behind your entry? What's the sense of that? I don't have time for that. You're bossing me around, man. Just leave it alone. Protect the coin. Capture profit. Reduce risk. Good. Guarantee yourself a free trade. Because if you took, in this case here, this is like 12 or 15 ticks to the bottom, and for some, God forbidden reason, the tweet comes in and gold spikes up 50 ticks, you have 15 less 3, 12 ticks of profit. And why do we put it 2 or 3 ticks behind the entry? Why don't we just go right down here, right by where we took our profit? Why don't you just jam it down there, Charles? Huh? What's the matter with you? You're going to lock in profits. I want a free trade, man. Well, there's a lot of cases that you will find that markets will come down to that bottom and it'll bounce and it'll come right back real close to your entry. And let's say you're going to catch a big run and you get stopped out with a super tight stop, right? You didn't give it any kind of wiggle room when you got in, and then bam, you missed the big run. Yeah, it defeats the purpose of the runner. That's right, John. That's correct. Everybody, defeats the purpose of the runner. This, what I am describing, is on sitting here in our our office chairs, all relaxed on a Saturday morning, is easy to be said. The actual execution of this takes some time to learn, and therein lies the rub, right? I mean, we can say this is what we're going to do, and then when you get out there and the market's firing bars at you in real time, it's hard to remember what you're supposed to do. But if you can approach almost every trade that you take in a very similar manner with good discipline and structure, you can make money. That's the key. You've got to learn these techniques and then rinse and repeat, right? Just do the same thing over and over again. Now, each market's going to be a little bit different. Sometimes you get deep retracements, say on like Russell or NASDAQ, for instance, right? Sometimes you might have to go for a 15-tick target and leave 5 ticks behind your entry because they can have big, stark retracements right off the push. Yeah, that's where, if you can, and you have a couple hours on a weekend or Friday afternoon or whatever, you go in there and you do some market replay. So this scalp is worth how much? Say you took it at 15 ticks, right above the swing low here, 15 ticks. How much money did you make on that trade right there? Before, not counting anything about the runner, not even thinking about the runner. Just that scalp trade is worth how much? How much money is that worth? 150 bucks. Not too shabby. That's good, right? I think most people just came up there. You want a bone and a half? 150? Sure, I'll take it. I'll take it all day long. Now, let's discuss the runner. This is where a little bit of art and science comes into play, and this applies to both the long and the short and the long. The long would be in the opposite direction. So the long would you be buying a bounce, and we'll look at some long trades. We'll look at some longs on gold. I mean crude. So it's long, and you're trailing it up. Short, you're trailing it down. First of all, can you notice that the red sneaky snake line called the stealth and the red line, thin red line called line 2, follow the market down as it descends. So the push down in the case of the downtrend is called the thrust. So here's an example of the continuation of the trend. You continue to put fresh lows in at the white line. The mid band and all the bands are stair stepping down, and the bars are all red, and the background is red. Life is good. Now, let's talk about this retracement, and this is where things get a little bit tricky. There are different types of retracements. There are small ones. Here's an example of a small one here, where the market pauses in the case of the push. Here's a deeper one right here. Here's an example of another deeper one right here. So what's going on here? Why do all these markets do this? Why do you, in a downtrend, don't you just go straight down? Shouldn't you just go straight down? Sell, 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 down, 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 fresh lows, straight down. I mean, just hit the button and let that elevator go down. Why are we getting this? What is this? What the heck is that? I don't want to do that. I don't want to do that. What is that? Short covering. What is this? What is this? What is that? We talked about it a few minutes ago. What is that big spike? Selling exhaustion. What is this? What is all this blue in a downtrend? What is that? Short covering, profit taking, all the shorties pulling back some coin. Repeat. What is that? Isn't that pretty darn close to where that spike is right here? Okay, cool. Now what is this? What is that? What the heck are they doing? They keep doing this over and over. What the heck? What the heck, man? Short covering, right. Selling exhaustion, short covering. Selling exhaustion, short covering. Now let's talk about how we deal with that. When you think about a trail stop, there are several approaches, okay? And everyone, all the market participants and all the traders that we're speaking to here this morning can approach it differently. There are some traders like to use extremely tight stops because they don't want to give any money back on their trades. And so as a result, that you find that type of trader, and that might be you, gets in and out of trades a lot. So your commissions are going to be higher, but you have less drawdown at the end of the trade when the market retraces against you and you start to lose some profit on your trade. So a tight stop trader might do something like this. Follow the market, follow the market, follow the market. And when you get a pop up in a retracement, short covering like this, you get out. Now, there's another type of trade out there that's called a minimum criteria trade. When we talk about minimum criteria trades, what are we talking about? Is this like some kind of minimum criteria? What is that? Like is that like an accountant counting up your coin or counting the beans, or that the least amount of coffee I can get a pot of coffee for a drink of a cup of coffee? All right. In the case of the downtrend, a minimum criteria is defined as follows, and you might hear this in the live trading room. a retracement that comes above bars close above line 2 and above the stealth line. So in other words, they are bars that go into band 3. Now, given that definition, do these bars right here meet the definition of minimum criteria? Here, yes or no? Based on the definition you were just informed of, is that considered a minimum criteria trade? Yes or no? How about this one right here? How about this retracement? Is that a minimum criteria trade in a downtrend short? These two boxes? Based on the definition? Yes. Yes. So for the trader who uses tight stops and gets taken out of the short mid-band entry up here, you got the scalp and you're trailing your runner, you're stopped out here. Could that trader then come in and then re-short the market on a rollover and a minimum criteria here? Yes. Now, will the fills be somewhat close to each other? Yes. Will you pay twice the commission? Yes. That's getting in and out. If you got out here, let's do another example on this one right here. Here you get in here, and you use an extremely tight trail stop. You do you get your scalp off, and now you're trailing, and you just follow tight behind the bars, tight behind the bars, tight behind the bars. You get out here, right? I don't know, maybe that bar right there, you're extremely tight, and then you re-enter short on the minimum criteria, say right there. Are you getting back in pretty darn near close to where you got out? Yep. Now, how do you avoid that? How might you avoid this getting in and getting out, and getting in and getting out, and getting in, in the same place, and you're in, and you're paying the commission, and you're getting in, you're captured, and what have you. On deeper retracement, that makes sense, because you're cutting your drawdown short. What if you did this? Let's say that instead of going tight right close to the bars, instead you went a little bit above the stealth line and line 2 and you faded it by. Maybe you went, say, halfway between the mid-band and the stealth in line 2. What if you left it loose, the runner? What if the runner was a little bit loose, like that? What if it was loose like that? Might that be a little better? On the mid-band itself, slightly under it, a little bit loose. Keep it sort of between the mid-band and the swing. Might that alleviate this whole in and out problem? Yes. In fact, in the beginning stages of the trade, in the live room, you hear this all the time. Leave your stops loose. Let the market run. And the reason we say that, and I might, or Gary might even call out a level. Leave your stops loose at maybe, 1590 to 1495.70. Leave them loose. Tight stops would be 1494.50. So when you hear those numbers in the room, what are we talking about? In the case of the short, what we are talking about is the tight stops will always be right around the location, in the case of the short, of line 2 and stealth. So if you look at your chart and you see that stealth line right there, that's going to correspond to a tight stop call. So there's no mystery around that, okay? We're not just sort of picking, well, I wonder where I put my short stops on gold. No, that's what that is. That's a tight stop. That means that if you want a tight stop, you're going to put your stop right there, like that. That's what that means, okay? If you hear the term use looser stops and put your stop at 1570, that means a close above the midband. Now, the distance between these two is generally going to be as much as, 10 ticks. So that's on a one lot, that's $100 you give back and draw down from your profit on your trade, right? See it? Tight stops are always going to correspond to, in the case of the uptrend, that will be line 6. I mean, you're going up. And the green stealth versus the midband, and the midband will always pretty much be the loose trade. The loose trail. Everybody see that? Yeah. So, in that regard, you can almost think of the trail stop as kind of part art, part science. It's almost like a feel thing, and it varies per instrument. ES, on the other hand, in the fact that it doesn't give you much movement and you want to keep it tight, you generally are going to have pretty tight stops on ES. Okay, they're going to be pretty tight, and it doesn't matter. It's $12.50 a tick. And commission's only what, $3, $4. So you put 2, 3, 4 lot on there. It doesn't. You can get in and out. Doesn't matter. Everybody see that? You understand? Okay, good. All right. Now let's play out to the end of this short. Okay, you drop very precipitously here. Loose stops would have kept you in, and then of course if you had tight stops would have got you out here. Loose stops would have got you out here. So let's conclude this trade, and let's just look at some numbers. Let's say you got out, I don't know, somewhere in here. Let's use a round number. Let's call it 93. All right, so you got out at 93, and the entry was at 0180. So how many ticks is that? Well, 8 points plus 8 is 88 ticks. So let's just put this right on the chart so we get clear about what the value of this trade was. So your scalper, oops, I don't know what's going on with my thing this morning, was 15 ticks or $150. Okay, and then the runner was, man, let me use a plus sign here instead of equals. Oops, gotta get my keyboard working right today. I don't know what the heck's going on here. Okay, 88 ticks was the runner from 0180 to, we covered it 93-ish. 88 ticks is worth how much? What would that be on gold at $10 a tick? Yeah, 880. Yeah, what the heck is my fingers doing? I'm a little spastic there. And the total would be how much? Well, what's 150 plus 880? Anybody? Is that 1030? Byron? Steven? Let me bring up my gonculator. Yeah, 1030, right? Yeah, okay, good. So that was a $1,000 trade, less commission. It's not unusual to see that on gold. When gold has its sell-offs, they can be very precipitous. There's no, it's not unusual to see 100, 200 tick moves on gold. In fact, we saw it a couple of times this week. And you just need to put a 1 or a 2 lot on and trade it in the manner that I just showed right here to understand that gold can make you $1,000 pretty quickly. So I would put gold on the short list of instruments to learn. Okay? Gold would be definitely on your short list of instruments to learn. Now, are there choppy days on gold? Of course. All markets get choppy days. Can it be range bound and sometimes doesn't give you a big run? Yes, that happens, right? But there, a lot of times it will punch and run. Okay, now I know a lot of you trade crude. I don't want to run out of time and not show a crude trade, and I'll try to look for a long one because I know we want to show how the long trade side of the market works out. Let me load up a crude chart. Stand by 1 second, please. Don't want to run out of time and not show some crude trades. Okay, it's loading. Data coming in. Any questions on the gold short? How that played out? Where to enter it? Why and how we entered it? What the reasoning was behind why we took the short? How we took the scalp? Okay, crude coming in. Bill says, I like trading with tight stops. What kind of time would you require for execution, watching trading when everyone is different, of course? Well, Bill, I'll tell you what, crude oil and gold are a couple of instruments that you could trade in the pre-market. Or you can trade in the Asian session overnight if you're a night owl. You can trade them early in the European session or even pre-market here in the U.S. And you could do quite well. Sometimes you get big moves. In fact, a lot of times when you come in the live room, you see Gary is already up because he's taken, one or two trades in the pre-market on gold and oil, and he's done. Yeah. If you were, that would be two good instruments to watch. All right, I'm going to do a pop quiz. I want to make sure everybody's awake here. We're going to do something really simple, and then we're going to look at crude, and you're going to make trade calls. Are you ready? I don't watch ZB. We used to, Dave D, many years ago. The volume is very high, so it's very liquid. The most liquid instrument is ES. The E-mini S&P futures are 1 million to 1.5 million contracts a day. That's the most liquid instrument of all futures. Right behind it are the bonds and the notes, ZB and ZN. They generally will have a 0.5 to 3/4 million lot traded per day. So they're second most liquid. But the movement is very small. You could watch an entire session and the thing moves like 10 ticks. And then sometimes it'll just sit there, and all of a sudden, boop, buy program kicks in, it pops up, 15 ticks, and then it goes sideways again. So you're going to be sitting there staring at the thing, waiting for a trade. And if you blink or you leave to get a cup of coffee and miss it, that's why we don't trade it. Yeah, okay, Louis. No, I'm shifting. Oh, here it is right here. Okay, sorry. Okay, here's crude oil right here. Now, crude oil on this chart right now, is it going up? Is this an uptrend or a downtrend? Type in a U or a D. You got 5 seconds. Generally speaking. 4 seconds. Boop. U. Up. D. Down. 3 seconds. Crude oil. 2 seconds. It's up or down. It's not sideways. Okay? It's up or down. Time's up. 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 The trend is up. Starting from over here, the background is green. The bars are predominantly blue. The mid-band and all the bands are stair-stepping up. You're taking out fresh highs with each push higher. It is up. Now you get a deep retracement here, and possibly you might have caught a little bit of a short, but that's a small chunk in relation to the fact that then it continued up over here. Good. All right, one more pop quiz, and then we're going to step back and look at some long trade entries. On this chart here on crude, is this chart up or down? 5 seconds. U for up, D for down. 4 seconds. U for up, D for down. 3 seconds. See, one or the other. Just hit a button. 2 seconds. Hit a button. Cast your vote. 1 second. Time's up. Down. Good. Background is red, with the exception of the striped shirt area right here on a deep retracement. Bars are predominantly red. We are stair-stepping like a set of stairs going down to the basement of your house. And the background is red, and we are heading down. Very good, very good. You got that right. Okay, good. Now, we've already covered the downtrend on gold, so we know, just to refresh, that we are taking retracements. So before I come off of this, let me blow this up and do one last pop quiz, since we're all experts in downtrends, right? We're all experts in downtrends. I'm going to give you 10 seconds for this question. How many short trades are on this chart? 10 seconds starting right now. Counting short trade entries. Entries only. Entries only. 9 seconds. Looking for a number. We're all experts in trading the short side, right? 8 seconds. Counting shorts. Where are you getting in? How many are there? How many opportunities to get short are there here? 6 seconds. You got to be able, if you're going to trade futures, you got to be able to look at a market and quickly discern and decide, where am I getting in here? You got to practice this all the time. Get really good at it. 4 seconds. Counting shorts on crude. 3 seconds. Looking for a number. I did not specify what type of entry you are taking. I just said, excuse me, the general question is, excuse me, sorry, excuse me. How many shorts? 2 seconds left. Time's almost up. Cast your vote. Submit your number. You are an expert in short trading. Taking shorties. 1 second. Time's up. All right, good. All of you cast many numbers. I see the low end of the vote was around 3 or 4. Some of you had 5. I see some of you put in 10 and 12. The largest number I see is from David D., who is at 15. Bill W. is at 12. Okay, good. All right, good. Well, let's start to the left and move to the right. Let's count mid-band shorts first, okay? Mid-band shorts first. I think there's one right here, right? Okay, good. I think there's one right in here. I'm going to count that one as the same as this one. I'm not going to say that that's 2. I'm just going to say that's 1 short. I think there's another mid-band right here. The band above the mid-band, yes? That qualifies. Here's another kiss and roll off the mid-band right here. So how many mid-band shorts do we have right out of the gate? 1, 2, 3, 4. Did everybody get those? Everybody get the 4 mid-bands? Okay, those are kind of a no-brainer, right? We all know about those. Short entries on crude, right? Okay. Now, let's count some minimum criteria ones. Minimum criteria, as you recall, is defined as some of you. By the way, some of you had to leave early, and I see a ton of folks come in a little bit late. That's okay. Don't worry about it. We've recorded this entire thing, and you're going to get a copy sent to you within an hour or two when we finish. Okay, so don't worry. You're going to get the recording, the whole thing. All right. Minimum criteria defined on the short side is closing above line 2 and the stealth. So would this qualify right here as a minimum criteria short? What do you think? Or how about this one right here? How about this little retracement right here? Yeah, okay, so there's another one. Okay. Let's see. How about this one right here? Yeah, okay. And how about right here? How about right here? Pop quiz. Pop quiz. Yes or no? These bars right here. Does this qualify as a minimum criteria? Y or N? 4 seconds. Does that meet the definition of a minimum criteria? Yes or no? 2 seconds. Just yes or no. Y or N? 1 second. You got to be able to look. You got to learn this chart. You got to be really good at, is it yes or no? No. No, this does not. Did you close above stealth? Yes. Check mark 1. Yes. Did you close above line 2? No. No entry here. Okay, good. All right. Counting minimum criterias. And do you have one right here? Yes. All right, so counting minimum criterias. 1, 2, 3, 4, 5. So the correct number would be 9. All right, now some of you are asking about this one right here. What say you, team? Let's blow this up. What about here? I know, I see the questions. I see it. Don't panic. I see you. I see you asking. I see you asking. Let's take a vote from the team. There's a ton of people in here this morning. What does the team say? Yes or no on that circle? Will that keep it at 9 or will that make it 10 shorts? 5 seconds. I'll count up the yeses and I'll count up the nos, and we shall see what the prevailing vote of the team will be. 3 seconds. Cast your vote for O ye of little belief in the minimum criteria trade. What say you, team? You move my cursor. Does it meet the criteria? Either it does or it doesn't. There is no gray area in trading. Well, maybe a few. 1 second. Cast your vote. This is going to be a tight one. It's a tight race. The no's are pouring in. The yeses are pouring in. All right, time's up. This is kind of a borderline one, okay? I'll give you that. If there was a gray zone, this would kind of be it. Did this bar right here close above line 2 in stealth? Yes. Yes, it did. It actually did, yes. Did this bar close, this sort of hanging Chad thing right here? Smoky Joe or whatever the heck they call those things? Yes. The close is technically above. You know, do we like to see more bars? Is it better to have more bars above line 2 in stealth like this one here and more bars over here like this where it comes up almost closer to the midband? Yes. Technically speaking, that is one. So you are correct. There were 10 short opportunities on this chart. If you said 9 or 10, you were correct. That did count as one right there. Just by the hair of a whisker. But we'll give it to you. Okay, good. Yeah, it wasn't much of a trade, Al Nasir. Yes, that's correct. Would you made a lot of money on it? Probably not. Did you get a scalp? I don't know. Well, you know, it depends on how close tight your stop was. Let's see the initial pop here. How many ticks would this have been to that fresh low? Oops. Let's measure that real quick here. See what you got on that one there. Now you got it at 94 roughly. And the bottom was here at 80. Well, 12 ticks. Yeah, you might have got a scalp. If you had your scalpy set at 10, you probably got a scalp off here. Now, your trail, did that make any money? Probably not. By the time you got in with some slippage and commission, probably didn't make any money on the runner. Got out there probably on the runner. You were filled here. So maybe you netted, 10, 12, 14 ticks, maybe something like that. So yeah, you did make money, 120 bucks. Okay, cool. All right, listen, let's move over to some long trades. I don't want to spend all day on the shorty side so that when you come in on Monday and you start looking at charts and you load up over the weekend and you practice, you know how to trade the long side too. So let's look at long trades on crude. Stand by. I'm going to show a couple examples of uptrends, and I'm going to do a pop quiz before we do this exercise. Now, I haven't really explained the long side, but it's the mirror image or opposite of shorting. So those of you who are already long trade experts I'm sorry, Alcinair, we got to move off the shorties. I got to get some long trades in here, so I can't answer any more. I'm moving on from that. Sorry about that. How many long trades are on this chart? Long trade entries. Mid-band only. I have a qualifying criteria. How many mid-band long trade entries on crude are on this chart? And I'm going to put the line of demarcation starting right here. You're going to start your counting from this line right here. That was overnight in the Asian session going into the European session starting here. Low of the morning at the time was the white line. The open of the session was the black dash line. And the high of the trading session is the dashed blue line. Counting mid-band long trades on crude on this chart, 9 seconds on the clock. Come on, you long trade experts. Cast your vote. Counting longies. 7 seconds. See if you can spot how many there are. Five seconds. Time's ticking away. Just count and cast your vote. Type in a number, whatever you think is appropriate. We will accept it. I see a lot of good numbers coming in here. They're looking pretty good. 3 seconds left on the clock for you to cast your long trade mid-band count on crude. This would have been through the end of the Asian session going into the European trading session overnight. and then into the crude pit open right here at 6 o'clock, continuing the uptrend over here. 2 seconds, counting longs on crude. 1 second, time's almost up. You got your count in? Mid-band only, that's the qualifying. Remember? Okay, this is mid-band only. We're not counting minimum criteria on the long side. Time's almost up. I see some squeakers coming in here. Bill W. got there. Brandon, Richard, PW, Dennis, Stephen, Charles V. squeaking in. Okay, cool. Time's up. All right, counting long trades. So in the case of the long, at the mid-band entry, it's a similar criteria as the short entry. Of course, it's above and below the mid-band itself, and or right on the mid-band is a long bounce criteria entry. Yes? Okay. So in this example here, would this be the first long mid-band trade? Yes. There's one. Okay, moving to the right, continuing on through the European trading session, would this be a long trade mid-band right here? Yes. So there's two. All right. How about right here? I'm going to just take this whole cluster of candles. How about that area right there? Is that one right there? What do you think? Yep, there's three. Okay, good. All right, still counting mid-band longs, crudy. How about these bars right here? It's looking pretty good. Number 4. Now I'm going to look at this other one this way. This one is clearly, I mean, the bars are literally sitting on the mid-band. There's no question that's an entry right there, right? Everybody gets that. Now that is 5. Now there's a different way you could have approached this area right here. Could this have been broken into 2 separate trade entries like such? First one would be here, just under but slightly on the mid-band, and I would say yes. So that would be 1, 2, 3, 4, 5, 6. However, is it possible that this trade was maybe a scratch or a slight loss in the fact that you only got up to here, and then it came right back in the box and you probably dumped it here and then re-entered right here? Yes. I would buy that case. So that would give you 1, 2, 3, 4, 5, 6, 7. If you said 6 or 7, I think you were correct. And I see most of you came in with 6 or 7. A couple 5s. I see a couple 4s. I don't see any, but well, there was a couple 8s. So you're getting it. Yeah, you're getting it. You're getting it, right? So in the case of the uptrend, the thrust is the opposite of the downtrend, which is in the up direction, like such. Retracements are pullbacks or pull downs into support where you would buy it. Here's an example right here. So you're getting long, if you recall from the very first part of the when we talked about uptrends and downtrends. Uptrend, you're buying from support anywhere in and around the midband. These are go-to trades for you right here. So it bounces and you get long, right? Then it returns to a thrusting motion up, like such. Excuse me. Now, speaking to minimum criteria long trade entries, I'm going to do a pop quiz and see how many you can get this. All right. Minimum criteria long trades. Is this a minimum criteria long trade on crude oil? Yes or no? Four seconds. Based on what you know from gold on the short side. What say you, team? These cluster of candles, does that meet the minimum criteria as defined by what that trade type is, the entry type? What say you, team? Two seconds. Here, I'll blow it up so we'll all discuss this together. That's a little better. Remember the criteria. Time's up. Well, let's do the check boxes. The checkbox 1 was close below, well, in the case of the short, you had to close above line 2 in this band right here. So in the case of the long trade retracement, you would have to close below line 6, right? So you would come into this band right here. So when we check that box in terms of minimum criteria, that box is checked with a yes. However, did any of these bars close below green stealth? Did any of those bars close below the stealth line? Yes or no? Any of them? Close below it? No. So is this the criteria? So therefore you have answered your question. Is that a minimum criteria? Does it meet it or not? No. No, it does not. By the way, I just want to offer a word to you, and this is not disparaging the minimum criteria trade entry type, but I rarely take those because sometimes they don't work out. Because why do mid-band trades work out so well? Any ideas? Why are we getting in here? Think about it for a second. Why do we get in here? Why do we buy the support? What's the logic behind that? Why do these tend to work out better in percentage win rate wise than this type of trade? What might be the answer behind that? Why are mid bands so good? Minimum criteria has an okay success rate, but you got to be in a powerful trend where you're expecting a lot of follow through. It's the depth of retracement. Good. Let's look at some numbers real quick. The swing high of the session for crude at this time of the evening was around 87. 87. When you pull back to here, you're at 75. You've only pulled back about 10 or 12 ticks. So the distance in taking a trade, given slippage and fill and commission, if you look at it this way, if I just want to get back to that top, if I'm not thinking we're going to break the top, we're going to challenge the top, and I want to at least get a scalp off by there, you might be lucky to get 10 or 12 ticks, depending on your actual fill and out. You might only get 8. Now, what's the difference between here, the top of band 8, and happens to correspond to the high of the day, versus getting in down here, say at 70 or 72? How many ticks is that? Say anywhere down here. 70, 72-ish versus getting up to the swing of the day, which is 88. You're closer to 15 to 20 ticks. So generally speaking, from the outermost band, whether it be 1 to the downside short or long to the upside, taking the long trade, is going to be anywhere from 15 to 20 ticks. So what we're saying is there is sufficient distance in the retrace, in this case right here, you pop up out of the box and you take out the high of the morning right here. So there's no question you got your scalp off, even if it was 15 ticks, right? Because you blow right through all the way to 95. It's actually more like 25 ticks from here to here, or maybe more. Last question. I'm going to circle some bars, and I'm going to ask you if it's minimum criteria, yes or no. And this is going to be the last question in the morning. We're going to wrap. We went way over. Do these bars here, minimum criteria long, yes or no? Four seconds. Based on the criteria as defined. Now, whether it made any money is sort of a second issue that we can discuss. But the letter of the law says yes or no on those bars right there. 3 seconds, cast your vote. Yes or no, minimum criteria, long on crude. One second. Time's almost up. Cast your vote. Look at the bars. All right, time's up. Technically speaking, the bars have closed below stealth, checkbox 1, yes. Below line 6, checkbox 2, yes. Technically, yes. Did you make any money? Did you scalp out, break even, or even lose a little money? Probably. In this case here, you can see that all you got was a little bip of 2 bars. In fact, it's quite possible that you got filled on one of these bars right here long, only to pull back right in your face. Now, when you get negative on a trade and there's no follow through, so it did not do this, it did this. Right back in your box. What do we do with, how do we teach how to deal with these, right? Trade that doesn't work out and pulls back in your face into the box, what do you do? What's the first thing you do when you encounter this situation? I know what I like to do. I like to hope it bounces. I love hope trades where I just sit, you know, I'm down a little bit, and I'm a little bit green on these bars. I'm up a couple of ticks, and it's dinking around. I'm negative again. I'm just going to hold on and hope. Hope that we get back up here and I can get my little scalpy off. If you're a hope trader, how many times those things work out for you? Or how many times you wind up just getting bit and get a full stop out? Rarely. Yeah. Okay. On here, you hit the close button. And that pulls back in your face. You start going upside down like that, you just dump it and you look for re-entry. No buy, hold, and pray. No. Don't. That's what I'm trying to say. Don't. If you get into hope trades and it's all pulling against you, and, oh, it's not going to get my stop. It's not going to go that deep. Buy more? No. You dump. You hit the close button. Get out. Get out and go to the chopper. Okay? And you could have re-entered right here. This is a proper entry at the mid-band right here. You dump it. Wait. And sure enough, about 10 minutes later, you got a beautiful long trade right here. Now, the hope trader who got filled here with a 12-tick stop, where's he getting stopped out? Or her, him or her? Probably stopped sitting somewhere right there. That hope trader is getting stopped out with a full stop out when the mid-band trader is doing what? Buying and getting long. Good. That is your re-entry, yes. Dump it up here, scratch, dump it, scratch. That's a 222. It's right in the heart of the European trading session. That'd be like 5 in the morning on the East Coast here. And then sure enough, here about 15 minutes, 20 minutes later, you get a nice pop right off the mid-band for a good long here at 94. So that's how you manage it. You know, if you get into these hope trades, that's really a habit you got to work on. You know, and that's this example right here is one of the reasons I don't usually take minimum criteria. The only exception to that would be at market opens or around news time. For instance, let's do an example. Let's say the market is opening, you know, and I normally look for mid-band retracements. You know, if a market's way up here, I'm not buying it. I'm not going to buy it. Normally what's happening here, let me just explain. All the market participants who were long from lower levels are taking profits. And so this would technically be, and here's the way you got to think about it sometimes, this would be where some long traders were stopping out of a long trade that they got into, say, down here or over here. So that's a long stop-out point. And there's not much distance between here, it's 04, and the top is at 14. You got like 9, 10 ticks, and you're right at the top already, right? We talked about that over here, remember? There's sufficient distance here between 95 and 15 is 20 ticks to make money. Concentrating on the mid-band makes a lot of sense, Louis. That's sort of the takeaway here. I think initially what you want to do is focus mainly on mid-band trade entries. Once you nail those and you got a good solid foundation of mid-band entries, you can move on to other types, deep retracements, phantoms, minimum criterias, all the types of things getting in and out. Start with the mid-band. Okay, thank you for coming, everybody. This is the end. I am stopping the recording. If you have any